Namaskar, this is Akhilesh Bhargav. Welcome to Tit-Bits on Business and Finance with me. India is witnessing an all-time boom in its capital markets. The secondary markets as well as the primary markets are both on fire and they have been hitting new highs every day. Just as the secondary markets are booming, so is the case of the primary markets, which is IPOs. It is boom time, it is frenzy time for IPOs, and there is a queue of IPOs waiting to hit the markets. Despite the fact that history says that not many IPOs have given long-term durable returns, yet what we are seeing is that irrespective of the pedigree of the IPO, irrespective of the purpose of the IPO, irrespective of the company's fundamentals, despite all this, we are witnessing that IPOs are getting oversubscribed dozens of times, and we are witnessing this in each case week after week. To us, this kind of a frenzy shows a total disconnect between the investment being made and the company and the prospects of the investment. According to us, IPOs are being put in, or investors put money in the IPOs in order to get returns. And to us, in such a frenzy, there's always going to be a question on, are you really going to get your returns, whether you are a long-term investor or whether you are a short-term investor. But then this frenzy, this boom is not being witnessed in any kind of an equity being raised by the public sector banks. While the investors may be gunning for any IPO, any equity being issued by the private sector entities, when it comes to public sector banks and their initiatives to raise capital, we are not witnessing any such boom moods. We are actually witnessing a very poor response to their efforts, their offers to raise equity. The fact is that with the COVID crisis, the balance sheets of public sector banks are expected to take a major hit. Their NPA losses are expected to shoot up. And because of that, the Reserve Bank of India of late has been nudging the public sector banks to start raising capital to shore up their funds, to get additional equity so as to face the impact of losses on account of COVID. The recent case of this kind of efforts by public sector banks to raise equity from private investors is that of the IDBI bank and also of PNB. Both of them made an issue of equity to private investors and the response was tepid. It was extremely poor. And the response was poor from the investors despite the fact that in both the issues, the banks were giving a discount of 5% to the market price. That was the kind of incentive available to the investors, a discount to the prevailing market price. But the investors were not convinced. Private investors stayed away. And because of that, public sector banks, other public sector banks and government financial institutions, they had to chip in. They had to put in the money and bail out these banks who had come up with a placement of equity. And they were not completely successful despite public sector banks and government financial institutions chipping in money. In the case of PNB, the issue size was 7,000 crores. And despite the support of its PSB peers, it managed to raise only 3,800 crores by way of a fresh equity offered to investors. In the case of IDBI Bank, as against a target of 2,000 crores, the bank managed to raise just about 1,200 crores. And in the case of PNB, LIC as a single investor pumped in 1,500 crores. So out of 3,800 crores raised by PNB, LIC put in 1,500 crores. Perhaps LIC would have done that even in the case of IDBI Bank. But then it is the majority owner of IDBI Bank already, and it was not allowed to do that. So what is the reason that private investors are shunning any equity offer being made by the public sector banks? The fact of the matter is that while public sector banks are protectors of depositor money, but when it comes to investors, they have been destroyers of equity capital, they have been destroyers of investor money. And that's very evident from the fact that during just the last 3 years, the government has pumped in 3 lakh crores in public sector banks in order to bail them out because money had been destroyed, shareholder wealth had been destroyed. After all, the government is a major shareholder of all these banks. The private investors have been thus shunning equity issued by public sector banks for this very reason. They have been destroying shareholder wealth. And how is it evident? How do we see that happening? We see that happening because of various reasons. The first reason why investors have been shunning and they are wary of investing in equity or PSBs is to do with their questionable financial statements. The financial statements of public sector banks have always been questionable. They have always hidden NPAs, they have always hidden losses, they have always tried to show a rosy picture. Viral Acharya says that they are so reluctant to recognize NPAs that it is at least 4 to 5 years' time before an NPA gets recognized by a public sector bank. That's the kind of delay they do. Until then, the NPA gets hidden. The fact then remains is, how do you understand the real picture, the real financial position of these banks? And as far as investors are concerned, it's a nervous situation according to us. How do you invest in an entity whose financial statements don't tell you the real picture? The second reason is to do again with hidden, unprovided NPAs in these banks. Because of the MSME sector crisis, because of the COVID crisis, because of Mudra loan crisis according to us, and also because of loans being restructured, there is going to be a wave of NPAs coming in these banks. At the moment, we are seeing that NPAs remain hidden, and with a larger wave coming, there's going to be a larger hiding of these kind of losses by the banks to show a better picture. It is these unprovided NPAs which again do not give comfort to the investors. They do not know the real financial position of the entities that they are expected to invest in. Viral Acharya is again on record saying that about 8.5% of total advances of public sector banks are unprovided NPAs. That's the kind of hidden losses in these entities. Which shareholder, which investor would want to invest in such equity? The next is, of course, public sector banks are ridden with frauds, they are ridden with corruption. In 2019, the figure says that the losses or the loans on account of willful defaulters in these banks total 2 lakh crores, and the figure has increased after that. It is because of such fraud, it is because of such corruption, it is because of such willful defaults taking place that investors are clear that their monies are not going to be prudently used. And that comes to the next reason, which is there is an utter misuse of public sector money, utter misuse of public money, utter misuse of investor money in public sector banks. The statistic is that while the total share of public sector banks in advances, loans and advances in the banking sector is about 60%, against that, their share of NPAs is 78% of the total. And that too is on the basis of declared NPAs. As we said, the lurking NPAs below the balance sheets are much higher. Investors are also noting that public sector banks have not been advanced in technology usage. Their private sector compatriots are far better in usage of technology and has made them far more profitable. They continue to lag behind, and that again erodes investor interest in their equity. And finally, what discourages the investor is that in a public sector bank, an ordinary investor has got no control whatsoever over the dominant shareholder or the actual owner, which is the government of India. The government of India is beyond control. It is authority in itself. It is perhaps even beyond the law as far as actual experience goes. We thus witness the government merrily meddling in the affairs of banks. Babus and netas are always meddling in the affairs of banks. It makes them inefficient, it makes them corruption-ridden, it dips their profitability. We then see that public sector banks have got what are called disempowered boards. Their boards virtually have no control over their direction, over their strategy, and major decisions get imposed on them by the government, by the Ministry of Finance. We recently saw that in the case of mergers of banks. The mergers were devoid of a strategy, and their mergers have not improved the efficiency, accountability, and profitability of the banks. But those kind of decisions are thrust on the board of directors by the government of India. It's a disempowered board. Which shareholder would like to be a shareholder of such an entity? We then see that as far as the regulator is concerned, in the case of public sector banks, it's a hapless Reserve Bank of India. The Reserve Bank of India does not even have the power to dismiss the CEOs and EDs of public sector banks like it has in the case of private sector banks. And that again is a discouraging factor. We thus see extreme misuse of funds by these entities, and that is generally at the behest of the government. Take the recent case of these shares issued by PNB and IDBI Bank. PNB, which itself was asking for money for investment in its equity, invested 300 crores in the share capital of IDBI Bank. Where is the logic behind it? Where is the prudence behind it? But then these are instructions that come from the top and funds get misused. It's a situation of no accountability. It is a situation where there is poor governance, and it's a situation where minority interests are certainly not protected. That dissuades, that discourages private investors from investing in the equity of public sector banks, even during a boom time like now. The irony of the matter is that public sector banks have over 70% share in the banking sector in India. They have an assured business from the government and government departments, and they operate in a huge untapped market. Usually, if an entity had such a situation, investors would be keen to invest in it. But that's not the case of the public sector banks for all the reasons that we just discussed. Thus, PNB and IDBI Bank had few takers for the fresh equity that they tried to issue. As Viral Acharya says, public sector banks are a case of maximum government and minimum governance. And Viral Acharya also calls them bad banks. And perhaps that's what the investors also think. And that shows their poor interest in fresh equity being issued by these banks, by PNB and by IDBI Bank of late. Till that is not improved, the private sector is not going to bite the bullet in fresh equity coming from public sector banks. This is Akhilesh Bhargav signing off till we meet again. Namaskar.
Now be the first to know about the latest updates on our new news app. Go on your Android or iOS, search for HW News Network. Download our app, choose the language you prefer to get updates in, and be up to date with the latest news.
If you like this video, please share it, and we would love to hear your comments in the comments section down here. Also, please do like our Facebook page and follow us on Twitter to get minute-to-minute news updates. For more such shows and videos, well, subscribe to our YouTube channel.